Hello, and welcome to Crypto Corner, where we bring you the latest insights on the world of cryptocurrency and blockchain technology. In today's video, we're going to be diving into a fascinating speech given by Raoul Pal, a well known global macro investor, about his experience in trading and investing in both traditional and crypto markets. So, buckle up and get ready to learn some valuable lessons from a seasoned investor. Raoul Pal's speech focuses on his bullish outlook towards various investments. He is very optimistic about risk, cryptocurrency, technology, and carbon credits. While he is bullish on bonds and gold, he does not currently have any of them and is instead waiting for opportunities in copper due to some secular backdrops. Raul tends to prefer secular trends over cyclical ones, as he finds it easier to make consistent profits over time. When it comes to technology stocks on the Nasdaq, Raul seeks a buying opportunity at the bottom of the log trend channel, where bottom indicators and signals are present. This is the sweet spot where the cyclical sell off hits the secular trend. Raul is particularly fond of secular trends, especially India technology and exponential age technology, which includes a range of fields from robotics to AI to EV to distributed data to the metaverse. He has written extensively on this topic over the past few years. According to Raoul Pal, we have hit the perfect sweet spot in many exponential growth assets, where prices have dropped to the bottom of the channel of their secular trend. In his latest live stream, he breaks down which assets he is bullish on, with crypto being his top pick for expected outperformance and the best return over time, particularly in 2023. Rawls' biggest bet is on Ethereum, and he is also buying NFTs as a way to potentially maximize returns. Rawl is not currently investing in the metaverse, but he has been exploring and using Vatom and has found it to be a promising option. He's keeping a close eye on Central Land and Cyber, as well as other tokens. The possibility of a debt bubble bursting is a concern that Rawl has addressed in his writing for Global Macro Investor. While he acknowledges that this is a potential risk, he believes that it cannot happen because it would be too catastrophic. Quantitative easing means that the government can endlessly finance itself and print more money to ensure that the value of assets and the collateral of the system goes up, thereby preventing insolvency. The events of 2020 were a big signal to all that insolvency is not an option that can be allowed. He also predicts that the baby boomer population will eventually die off, or GDP growth driven by technology and productivity growth has to go up in the long term game, much like what Japan and Europe have been doing. Pal believes that we will get the debasement of assets to counteract this, which leads to higher asset prices and everybody becoming more and more angry because the markets never go down. He warns that fighting this game will only lead to blowing oneself up. Pal also addresses the topic of the dollar, stating that he thinks the dollar falls a bit further and might even get down the 95 in the DXY, which is the unwind, where it goes back again. However, he believes that structurally the dollar is in an uptrend because 85% of world trade is in dollars, and debt in the amount of $400 billion of GDP is denominated in dollars. We have a structural shortage of dollars, and that shortage tends to drive the dollar higher even in times of crisis. Powell remains bullish on the dollar. Additionally, he shared a personal story about living in Spain in 2012 during the massive financial crisis in Europe. They almost lost their banking system, and Cyprus lost its enabling system, wiping out savings. Pal notes that it was a mess and how people had to take cash from home and try to find gold. Raul Pal believes that either the baby boomer population has to die off or GDP growth driven by technology and productivity growth has to increase, which makes it a long term game. He thinks that they will hang out for as long as possible Similar to Japan and Europe, this leads to the debasement of assets, which counteracts it, and the basement of currency, which results in higher asset prices, making everyone more and more angry because the market never go down. Therefore, Rawl believes that the world works this way now, and people will blow themselves up if they try to fight that game. Regarding the dollar, Rawl thinks that it falls a bit further and might even get down to 95 in the DXY. Structurally, the dollar is in an uptrend because 85% of world trade is in dollars. Debt in the amount of $400 billion of GDP is denominated in dollars, so there is a structural shortage of dollars. This shortage of dollars, even in times of crisis, sometimes tends to drive the dollar higher. Therefore, Rawl remains a dollar bull. In 2012, Rawl was living in Spain during the massive financial crisis in Europe. He almost lost his banking system by a generator of tin food. It was terrifying when the banking system was lost and Cyprus lost its enabling system. Savings have been wiped out, so it was a mess. Rawl luckily escaped because the money printers stopped the collabs right. He learned a big lesson there. The euro was trading at about 148.5 to the dollar at that period of time, and Rawl had euro savings and his business was billing in euros. He took them to ridiculously low levels, kind of like this crypto. So he decided to switch all of his life savings to dollars, changed the billings for global macro investor to dollars, and then went to buy two properties, one in the Cayman Islands and one in Miami, to prevent him from trading out of his position, which is what he's done with crypto. Rawl was thinking through this mechanism of assets allocation in that kind of very big global macro turn right. He wanted dollars, and he had figured out how to hold dollars, which is by buying bonds. Assets like real estate, art, and stuff that is priced in dollars. This way, he was putting in dollars, and his base currency is that. If he bought real estate on top and real estate went up 50%, he would get the dollar appreciation plus 50%, or 50% multiplied by 50%, giving him super leverage on his dollar position. Recently, he realized that this is the same trade he's doing in crypto. In the next part of Raoul Pal's speech, he continues to draw parallels between his experiences with traditional investments and his current strategy with crypto. He talks about how he moved his life savings into dollars when the euro was trading at an unfavorable rate, and how he used his knowledge of asset allocation to make a decent return. He then applies the same strategy to crypto, buying fixed assets like rare NFTs or community assets and enjoying the free call option they provide. Rawl emphasizes the importance of buying good assets with less volatility, like the Broad Ape NFT, which has been stable at $65 for a year and a half. He sees NFTs as great call options with a limited downside and unlimited upside potential. And even if his NFTs were to go to zero, he still has his ETH investment. Rawl is still bullish on the dollar and crypto for the same reason: his understanding of asset allocation and the potential of super leverage on his investments. He has confidence in his strategy and doesn't plan to change his view anytime soon. That's all for today's video on Crypto Corner. We hope you enjoyed this deep dive into Raoul Pal's experience and insights on investing in both traditional and crypto markets. Stay tuned for more exciting news and updates on the world of cryptocurrencies and blockchain technology. And don't forget to subscribe to our channel for more contents like this. Thanks for watching.